everyone, good evening. It's not yet Mother's Day, but it will be on Sunday. But we at ET now believe that it should be Mother's Day every day. So this is one such day, and we are celebrating the Mother's Day right here on ET now. I'm Mubina Kapasi, and in today's show, it's not going to be about you, but it's going to be about your moms and all the women out there, especially the single moms who juggle so many responsibilities and are the real-life superheroes for ET now and should be for everyone as well. So all the women out there, take some time off, tune in right now, send in all your questions and queries that you have about how to build yourself a secure financial future. And today, to do that, we have with us Harshvardhan Roongta of Roongta Securities. Harsh, thank you for joining in on ET now. Let's first up talk about how important is it for women to be independent financially. You know, interestingly, we were having a conversation about how any which ways women tend to live longer than men. So it's important that women all the more do have their finances secured. So tell me, Harsh, what is it that you would advise women to do in terms of securing their financial future?
Well, Bubita, there are a couple of things, of course. Let's just first understand there are different distinctive, behavioral patterns when it comes to handling money. So let's not get into the issues of who's earning, who's not. I mean, if you're a homemaker, you still have a job at hand, right? So it's not that you just have to leave everything to your husband to take care of. So ideally, either you could be actively involved in managing your money, or you would at least have to be passively involved. So what I mean is actively is that you're taking decisions, you're actually going across and doing the documentation, you're doing all those bits. Passively would be, even if somebody else in the family is doing it for you, make sure at least you're keeping yourself aware of what is happening. Where is which investment being done, so that in case of any emergencies, you know and you can access that bit of investment that has been done. Now when you come to Mother's Day, since they were talking about Mother's Day, more particularly if there is a single mother, then there are enhanced responsibilities. So there are few things that if they can just put it down in on a simple piece of paper and start working towards it. So a few things that we can understand, because being a single mother, not only you're not only taking care of your child, you're in addition to that, your career, your job is what you're doing, your household. There are a lot of things that you have to single-handedly manage, and raising a child isn't easy.
It takes a village.
It takes actually a village to take care of the child. So in any case, the idea is that at the first instance, the first thing should be, when you note down the different activities that you're undertaking, see if there is something that you can outsource.
Yeah.
So that's the easiest thing to start with. Do I have to do it myself, or do I actually outsource it to an agency or to somebody else? So one of the things, because we are a money show, so let's concentrate and focus ourselves only on the finances part of it. The good part about financial planning is that this activity can be outsourced, or rather it should be outsourced, because you may not have expertise in this. And if in case you're outsourcing this entire activity, the first thing is to have a financial planner in place. So this person will actually handhold you, guide you, and walk every stage of life with you, and just be around with you in terms of finances. So easiest thing is to outsource one such activity, but make sure even when you outsource this activity, do not give it up completely. You need to be passively involved, so keep a tab of what is happening. Now, if you have to jot down a few things that you may require in your own personal life, in terms of financials, what are those 3-4 different things? The first thing that you will need to make sure is that you have an emergency fund. You're a single mother, that is the profile that we're talking about. So you need to have an emergency fund equivalent to about 6 months of your expenses. So that should be available to you at call. It could be either in a fixed deposit, or it could be in a liquid fund. It could be at any such place which is liquidable and access to in about a 24 hours or 48 hours notice. So fixed deposits and liquid funds fit into that profile. The other thing that you need to then take care of is understand very clearly that your child is going to grow up, and at one point in time you will want to give him or her a good education. Thereafter, they can be on their own. You may not want to provide for their marriage, may not. That's a different story altogether. So just put it down on a piece of paper to say what is the age of your child currently. When do you estimate that you will require X amount of money for the undergraduation or post-graduation? So put that down, ascertain the time that you have in hand, and start drawing up an investment plan for that. The earlier you do that, the lesser amount that you will have to invest to accumulate that kind of corpus that you need. So simple things. This is the second goal that you need to very articulately put it down and start saving for, because the child also has nobody other than you to provide for. Now the third thing that you will have to take care of is your own retirement corpus. Because at one age, at one time in life, you will not be able to work. Despite you wanting to, your physically we may not be able to work. Now at that point in time, being a single mother, being, in that situation, we assume that you will be dependent only on yourself even then. So create a dedicated retirement fund. This has to be now, put aside separately and not touched for any other thing. Now, if you have 20 or 30 years before you retire, again, time is to your side. Invest small amount of money and you will accumulate a larger corpus. So these are a few things that you will have to, very clearly put it in place and then start moving around. So as I said, first step, look for things that you can outsource. I mean, that's the simplest way to, unburden yourself from all the activities that you undertake.
Okay, well, very important points, like for example, an emergency fund of at least 6 months. That is something that I think all women should, take note of. And also, I think the point that you should be aware of your finances. Many times women are just so detached.
Absolutely.
And in India, it's particularly a problem, right? The detachment that women have from the ghar ki kamai, or where is the meat of the money, being invested. That's very important. Awareness of where the finances are is extremely important. Well, ladies and even the gentlemen who do want to give their mother something, well, instead of giving them that showpiece that's just going to lie on their mantle, how about you give them an SIP? And to help you in which one to select, we have with us Harshvardhan Roongta. So you can call in. The number is appearing on the top of your screens, and this way you'll certainly be able to give your mother a very special Mother's Day. Well, for now, we have already received a couple of queries, and the first one is from Sanjana Bakshi. Sanjana says, I am thinking of giving my mom an investment this time for Mother's Day. Well, it's like she literally heard me. She's 55 years old and she's always been dependent on my dad for finances. Would SIP be the right option for her, or should I buy a bulk mutual fund? Also, which fund do you recommend? Well, she's already 55 and she's dependent on her dad for finances. So now I don't know if the plan is that Sanjana will keep putting in that SIP money, or is it going to be a bulk mutual fund? But regardless, the fact that she's 55, dependent on her husband for finances, what would you recommend Sanjana to give to her mom?
Mobina, first let's just address that part of being dependent on father part, dependent on dad factor. So, your father and mother, Sanjana, are a unit, okay? So, your father takes care and he works, to generate an income for the family, wherein your mother works and takes care of the house. So, there are two different activities these individuals are undertaking. And just that one activity earns an income, the other activity does not really get that income per se. So, it's not really a wrong thing for your mother to be dependent on your father. So, that's not a bad thing. I don't think you should look at it from that point of view. It's just that as a unit, they are taking care of different things. So, nobody is in that sense superior to one another. So, I just thought I'd just clarify that bit. So, women do a lot of work which cannot be, put into numbers, unfortunately. Coming to exactly what you're looking at is like you want to gift something to your mother this Mother's Day. It's a very noble thought and good that you're planning to have some money in her name so that she can be using it. Now let's just identify what you would need this money for. So there are two things. One is, does she need this kind of money for her regular expenses on a day-to-day basis from even now? So it could be small personal things that she wants to buy which you want to provide for. That is one part. The other would be that she's 55 now. So if you have in mind that you need to, invest and create a corpus for her at her age of 65, then that's a different investment plan altogether. So in case you're planning to create a corpus for future, so that nothing comes to her from you as of now, but a corpus, a sizable corpus is created at her age of 65, 70, whatever. So then SIP will work for you. In case you're looking at an avenue where she needs to get money every month from now itself for her own personal expenses, then SIP will not work, because SIP actually is a process where you accumulate corpus over a period of time. So there are two different things altogether. So whether a lump sum or an SIP, I'm not able to guide you right now until I know what exactly you want out of this. In case you want to give her regular income, then of course if you have a lump sum, put it in a fixed deposit or some kind of an SWB plan with a mutual fund where she gets a regular income per month and she can use it for herself. In case you're looking to generate a corpus after 10 or 15 years from now, then SIP will work for you. So without having information about what exactly you're looking for and what she wants, it's difficult to suggest, but this is the methodology that I can suggest to you that you should start thinking on, and then write back to us, and we'll be able to possibly give you a concrete financial plan.
Well, yeah, Sanjana, any follow-up questions, you can always email in. The email address is appearing on the top of your screens. Okay, next up we have Ankit Vakil, who has sent in his query regarding the mutual fund portfolio that he manages for his mom. Okay, so the funds that are in his mom's portfolio, there's the Franklin Ultra Short Bond Super Institutional Growth Direct Plan, and he's mentioned that that one's for the emergency purposes. There are two ELSS plans. One is from Axis and the other one is ABSL. Then there are 4 direct plans: Murray Asset, Franklin Short Term Income, Kotak Standard Multi Cap, and HDFC Small Cap Growth. I noticed there are no large cap or index funds or anything like that. He's not even mentioned his more details about his mom's profile, so that's one drawback. But Harsh, what would you recommend Ankit to do?
Well, Muminda, if you just have a look at this, I mean, the scheme names have been mentioned, but we don't really see the quantum of investment that has been made in each scheme. So it's difficult to comment whether you've got appropriate allocation within the large mid multi-cap categories that you have. Further, as you rightly said, we don't even know the goals and objectives. You don't have the profile of a mother exactly. With respect to what exactly are you looking out of this investment. So a little difficult to comment whether having X amount of debt or Y amount of equity is appropriate in a portfolio. No. So we're not able to comment on that. Nevertheless, if you just look and scan through the schemes that he's investing into, that she's rather investing into, you have an ultra short-term bond fund, you have a multi-cap, you have mid-caps, you have ELSS, which is again a multi-cap oriented. You have a large and mid-cap kind of a category investment as well. So if you look at the schemes per se, independently without aligning it with the objectives and the quantum of investment, then I think the schemes per se are good. There is no need to make any changes there. Just that every scheme by itself may be good. But if you put it in perspective of what you need in life, what you need or what is the quantum invested, then we are able to take a better decision. So in that sense, I'm not able to comment appropriateness and the allocations, but I could say the schemes that is invested are good and he can continue investing.
Okay, not bad in terms of the schemes, it's all right. But yeah, I think just a note for all our viewers as well, it's important to get in how much you're investing already and what your your objectives are behind the chosen investments and why you're investing. So that's always good information to work with. But I think it's impressive that you are managing your mom's portfolio. Well, we'll do one thing. We'll take a very short break right here on the show. Do remember, folks, we're celebrating Mother's Day right here on ET Now on The Money Show. So call in if you do want to know anything about your finances. We have Harshvardhan Roongta right here to answer your questions. Welcome back. You're watching The Money Show right here in ET Now, where we are celebrating Mother's Day, and of course we'll be answering all questions and queries with respect to the mutual fund portfolio or any financial related question that all the mothers out there do have, or for that matter their kids have, with respect to their mother's portfolio. Well, let's move on to the next question. In fact, it's coming in from a single mother we were just talking about. Prerna Kothari writes in to us saying, I'm a widow, 48 years old, with one child aged 17. When my husband died, he left behind the following. There's a PPF of 6 lakhs and some old investments in shares which are now worth 9 lakh rupees. As per his demat account. I have no other investments apart from these, and I have no knowledge on how to invest. Only in the last few years have I been able to start saving some of my salary. How should I go about investing my savings? I think it's that problem of that sudden flow of income stopping, and then you have to grasp with the reality of having to be the bread earner. In this case, finally she's been able to go about saving some money, so good for her. But now, how should she ensure that she's sustainably able to build herself a future?
Yeah, so well, Prerna would need to have 3-4 things in place. The first thing is, of course, as we already mentioned, that you need to start jotting down exactly what you need and when you need. So this will be a starting point and give you a sense of your responsibilities and liabilities coming over. Now we see that your child is 17 years in age already. So the first thing that I can foresee is that you will need some kind of money for higher education. It could be in the next 1 year to the next 3 to 4 years, you will need some kind of money which will be required for higher education. Now if I map it to something that you already have, so you have a PPF and a stock portfolio of about 9 lakhs, PPF of 6 lakhs. So I think this can be allocated to be used immediately for your son's or your child's higher education. And if this is what you're planning to do, then you should liquidate out of the equities right now and put that amount in a fixed deposit. So as and when required, you're immune to the volatility of the exchange of the equity investments. and this money lies in your fixed deposit. So this is the first thing that you can do, and you have certain amount of money which is already available to you. You mentioned you have certain savings out of your income right now, so that should be then allocated towards creating a retirement corpus for yourself. You're already 48 years in age and you've got another 10 years to work. So make sure that you have retirement corpus available that helps you sustain a lifestyle for you post-retirement. So these are two things that I believe you can start with. And as and when you progress in the next couple of years, then also, I mean, emergency fund should have been earlier, but looking at your child's educational requirements and your retirement, I put that ahead. But do start creating a emergency corpus as well. So it could be 3 months because you're on salary. You could have a 3 months emergency corpus. But in any case, you'll have to start simultaneously creating a small portfolio for that as well. Well, to begin with, I think this is good. But as I've also suggested, try and outsource certain activities, financial planning being one of them. Get hold of a good advisor who can walk along with you the entire path and guide you at every level.
Okay, all right. So that's the recommendation Harsh is giving to Prerna Kothari. She is a widow, 48 years old. And yeah, it's important to first hire a financial planner who will be able to help you out as well for the way forward, and list your goals. Retirement for your own self should be on top of that as well. Okay, next up we have Falguni Shah, who's from Mumbai, and she's joining us live on the phone line. Hi Falguni, good evening. Thanks for calling in. What's your query?
I'm a housewife and I run a small catering business, taking some small orders with small profits. My house runs on my husband's money. I just wanted to know, how can I invest money that I earn from my catering business so that, and I don't need this money for long.
You don't need
the... make my investment.
Okay, understood. All right. Thanks, Falguni, for calling in. Harsh, what would you advise her to do? I mean, it's her money to use. She can spend it however she wants, but I think Falguni is making the wise choice of choosing to invest it.
Yeah, absolutely. Just that I have my concerns because, you're running this catering business out of your house. I'm more certain you started as a hobby and it's become a small catering business per se. So unless, Falguni, you have this money in your bank account, so either it has to, because any investments in financial assets will need to be routed through your bank. So if it's not in your bank account, it's very difficult to start investing that money. So you cannot have cash being put into, say, fixed deposits or recurring deposits or mutual funds. You cannot really have do that with it. So the first thing, if it's in the banking system, then of course you can invest it. If it's not, there are two things you can do. The first one being that you can invest into small pieces of jewelry for yourself, or or gold for that matter. However, I would, because your household expenses are taken care by your husband's income, this is more like some work that you're doing on your own to earn small bits of money. Why don't you just go ahead and pamper yourself with it? I mean, just buy some piece of jewelry for yourself, or take a spa treatment. Why not? I mean, it's not necessarily that if you have some money you must invest it. If you do it, it's good. But if everything else is taken care of, just spend it on some jewelry for yourself. And if you don't want to really wear jewelry, buy small pieces of gold. I think that's a good thing to do in case if it's not in the banking channels. If it's in the banking channels, of course, you can route it to many other things. You can do a recurring deposit with the bank, or you could put through SIPs, or you could do, invest in all other products that are available at your discretion, provided it is in the banking channel.
Oh, okay. Very quickly, I just want to take on board the next question we are getting in. Vasudev joins in on the phone line. Hi, Vasudev. I understand you have a question regarding your mother's portfolio.
That's correct. Thank you. So my mother has got recently a corpus of 1.5 crores.
Okay.
She doesn't get pension, although. But what is the ways for her to maximize regular monthly income out of it?
She's retired, is it?
Yes.
Okay, and no investments currently.
That's correct.
Okay, Harsh, what would you advise quickly?
Yeah, so Vasudev, there are a couple of things that you need to keep in mind at the time of retirement. So retirement is a life-changing situation and you don't have any margins for error. So remember that in case you make a mistake, there is no time and no opportunity to recover that money again. So for retirement, I would suggest that do not just look at how do I get a monthly income from her, but you take a full holistic view. What are the other sources of income that she has? Is there any other earning member? What are her liabilities? What is the risk profile she has? So put everything into perspective and then take a decision. So I will discourage you from just taking one view as to how to generate regular income on this, but take a holistic view, and possibly you may have to consult somebody and look at a more detailed discussion rather than this one small conversation. In the absence of anything else, go with a trusted method, which is put in a fixed deposit and draw quarterly, half yearly or a yearly interest. I mean, in absence of any other information and no other source, this is the way you can go about.
Okay, yeah, and if it's a big sum, so it's important that you do have a proper sit-down discussion with your financial advisor. But yeah, fixed deposits always one of the safest, but returns may not be that attractive. On that note, Harsh, we're out of time, so thank you so much for joining in, helping all the moms out there with their questions and queries, and I'm sure they're really going to appreciate it, because yes, ladies, like we say, it's important to financially empower yourself, put yourself as well first along with your kids, as you usually do. And once again, the whole team of TMS in advance wishes you a very happy Mother's Day.